2025 has shaped up to be a massive year for crypto, and like every cycle, we've watched trends rise, hype fade, and entirely new narratives take the spotlight. Stablecoins became a major pillar, prediction markets took off, and we finally saw meaningful steps toward regulation and institutional involvement. So with all that momentum, the big question now is, what will crypto look like in 2026? To get a clearer picture, let's look at a new write-up from Coinbase Ventures, the corporate venture arm of Coinbase that invests in early-stage crypto startups. According to their team, the underlying infrastructure for crypto has quietly leveled up over the past year. Stablecoin rails are reshaping how payments move. Cross-chain proofs are shrinking settlement times from days to near instant. And even if prices don't always reflect it, liquidity is improving, privacy tools are getting smarter, and blockchains are learning to communicate far more reliably. From all this, they've identified 9 big ideas that they think will shape 2026 and organize them into 4 key themes. So let's break them down. The first idea is the rise of real-world asset perpetuals. A perpetual future, or perp, is basically a way to speculate on an asset's price without actually owning it. It tracks the price in real time and you can go long or short instantly. And now imagine doing that for real-world assets like stocks, commodities, and even economic data, all without needing to tokenize anything. Now, tokenization sounds great in theory, but in practice, it can be slow, legal heavy, and often just not possible. Perpetuals bypass all of that by creating a synthetic version of the asset. Coinbase Ventures thinks this could open up 2 huge paths. Firstly, the ability to create markets around almost anything, like private company valuations, economic indicators, and niche data sets. Things that normally have zero liquidity could suddenly have tradable markets. Second, it gives crypto traders access to classic macro exposure. On-chain markets tied to things like oil prices, inflation expectations, credit spreads, and volatility. In other words, access to the kinds of tools professional macro traders use, but fully on-chain. So they call this shift the perpification of everything, and expected to be a major trend heading into 2026. Next up is a new wave of exchanges and market-making models. Now, one idea that keeps coming up is something called a prop-amm, short for proprietary automated market maker. On most decentralized exchanges today, regular users deposit their funds into liquidity pools, and traders interact with that liquidity directly. Now, prop-AMMs flip that model. Instead of depending on hundreds or thousands of depositors, the protocol itself provides liquidity using its own capital and its own rules. And that gives the system more control. It can protect itself from predatory trading strategies that would normally drain liquidity providers. So Coinbase Ventures is especially interested in how this is playing out on Solana, where some exchanges are experimenting with setups that limit who can interact directly with the liquidity. So trades get routed through aggregators to help shield liquidity providers and keep markets healthier. These innovations have the potential to improve decentralized trading even before blockchain upgrades arrive. At the same time, prediction markets have become one of crypto's first genuine mainstream use cases. But right now, they're scattered everywhere. Different platforms, different interfaces, different liquidity. So Coinbase Ventures expects the next step to be aggregators. Basically, unified terminals that pull every prediction market into one place. So imagine a dashboard where you can see odds from every venue, track all your positions, and use advanced trading tools. Now, when it comes to the future of DeFi, Coinbase Ventures is focusing on 3 key areas they believe will drive growth. The first is how perpetual futures are merging with lending protocols. In the past, perps lived on their own platforms, but now traders can deposit collateral, earn yield on it, and still use that same collateral to take leveraged positions. So no need to choose between earning and trading. And considering that perpetuals already see over $1 trillion in monthly volume, this kind of integration could reshape how people hedge, earn and leverage on-chain. The second idea is unsecured lending or borrowing without collateral. In traditional finance, unsecured credit is massive. Think credit cards, personal loans, and working capital making up more than $1 trillion in unsecured credit. But DeFi has always required over-collateralization, which limits who can actually borrow. And that's why Coinbase Ventures believes this can finally change by combining on-chain behavior with off-chain reputation and identity signals. If DeFi can tap into even a small slice of the $1 trillion unsecured credit market, it could start directly competing with traditional banking. And the third idea centers on privacy. Transparency is one of crypto's strengths, but it's also one of its biggest challenges. Most people, they don't want their entire financial history visible on a public ledger, so we might see the rise of privacy-preserving technologies like encrypted order books, private lending systems, or even new types of privacy assets. These could either be built on specialized blockchains or added on top of existing networks using advanced cryptography, but the goal is simple: keep systems verifiable and secure without forcing users to expose every transaction. Now, the final theme looks beyond finance and into the world of course, AI and robotics. One of the toughest challenges in robotics today is gathering the right kind of training data. Robots need to learn from physical interactions like grip strength, pressure, and handling soft materials. But that data is extremely hard to collect at scale. So Coinbase Ventures thinks that decentralized networks similar to DeepIn could help gather this data globally, and that could speed up progress in embodied AI and real-world robotics. They also highlight another growing issue: telling humans and AI apart. We're entering a world where nearly any piece of content could be AI generated.
You didn't even realize, but I'm completely AI generated.
So they believe that we'll need a reliable proof of humanity layer, something that verifies that a real human stands behind an action or a piece of content. So this could involve biometrics, cryptographic signatures, or open standards shared across platforms. They highlight that WorldCoin is one early attempt, but they expect multiple solutions to emerge. And lastly, they expect AI to dramatically change how on-chain applications are built. Today, writing secure smart contracts takes experience and time, but by 2026, AI agents could help non-developers launch full apps in just hours. These agents could write contracts, test them, patch vulnerabilities, and monitor risks automatically. They compare it to what GitHub Copilot did for software development, a major unlock in creativity and speed. So that's a full tour of what Coinbase Ventures believes will shape crypto in 2026. So these themes give a pretty clear look at what major investors are paying attention to. But let us know what you're looking forward to in the comments below. And of course, don't forget to like this video and subscribe to stay updated. Bye.